Man 33 from Portland, Maine asked, I've heard you say before that you lose money every single day that it sits in the bank. Since the bank is paying interest on the money, I don't understand what you mean. Will you please explain how I'm losing money? Well, to answer that question best, I think you have to think about why you put your money in the bank in the first place. And the simple answer for most people is that it's a safe place to store money while it earns interest. And so you assume that instead of putting it in the mattress, putting it in the bank gains you at least a little bit of money at the end of the year. Well, if you really examine it and you look at the dollars and cents, we live in a time where we have an inflation rate of about 4%. Yet the bank pays you an interest rate of about 1% on a savings account, meaning that for every $100 you put in the bank, they give you $1 at the end of the year. However, you don't get to keep the entire dollar because Uncle Sam taxes it 15% for capital gains tax, which means that for every $100 you leave in the bank for an entire year, you get 85 cents interest. And again, you think, okay, it's better than keeping it in the mattress, which it is better than keeping it in the mattress. However, that $100 doesn't have the same spending power that it had before. So if we look at the inflation rate of 4%, it cancels out the 1%, but it gets even worse. If you're in the 35% federal tax rate, which the average person is, you need 6.2% return on investment in order for your money to break even in this economy. So you have to begin to explore other options for storing your excess money. Rosa F. from College Park, Georgia asked, I've seen a lot of commercials advertising the sale of gold coins to guard against inflation. Since the price of gold is rising steadily, should I convert my savings to gold coins? That's a fantastic question since gold is rising and it's above $1,400 an ounce right now. However, the issue is, do you convert it to gold coins, do you convert it to gold bullion, or other ways to invest in gold? When we look at gold coin, which is called numismatics, the value of a gold coin is based not only on its weight, but also on its scarcity and how well it was minted. And when we look at the coins that are being sold today on television, they're not scarce. And so that it doesn't increase the value because they were uncirculated and everybody who bought them holds on to them. So in actuality, there are very few coins that were minted after 1970 that have increased value more than their bullion weight. The coins that have the most value were minted pre-World War II, and actually the coins between 1860 and 1915, which cost you about between $10,000 and $30,000, have the most significant value. So you should look at other ways to invest in gold if that's your choice. You can invest in gold bullion, which has its own issues because you have to be able to store it. And if the price of gold falls, which eventually it will, it'll be hard to liquidate a gold bar. You can invest in gold exchange traded funds, which is something you should look into, gold mutual funds, and also gold certificates, because if the price begins to decline rapidly, then you'll easily be able to liquidate that and cash out.